Hello traders and welcome to another video review. Today is Monday, May 25th, 2026. Let's take a look at the technical part of our situation on market in early morning trading. We are starting with euro dollar. So what is going on the euro dollar for our time frame chart? ABC correction to the downside is still in progress. However, there is some sort of indication saying that low at 1.1577 is the low of the ABC, especially C wave to the downside. So the corrective wave might have been completed at this level. We have a very nice pin bar here. This is a classical pin bar that is showing us that someone is apparently buying the dip, and now the market is trying to move higher. We just hit the supply zone. And the situation here is very interesting, because any breakout above the supply zone, especially above 1.1669, is basically bullish. However, we need to place the Fibonacci retracement tool at this level. So let me just place this Fibonacci retracement tool so we can see how high can we go if we are moving higher. If we are moving higher, we can go as high as 1.1686 and 1.1712, which is the 61% of the Fibonacci retracement. So even if we break above this supply zone, still some kind of a levels of interest of Fibonacci retracement are here present on this chart. If there is a failure to move higher, we will reverse and move lower towards the lows of 1.1517, and then maybe even the lower channel line will be hit. This is our channel. So right now it looks very well for the end of the corrective wave, ABC corrective wave, and we are waiting for the movement to the upside. The British pound broke above the supply zone on 4-hour time frame chart. Local high 1.3489. The low was made at 1.3483, and now the market is ready to continue higher. Let me just place the Fibonacci retracement here as well. So from here, let's say, to here, and you can see that we retrace 50% of this movement to the downside, right? Of this swing, okay? And 61% is located at 1.3520. So any movement above this level will be considered bullish. The momentum is strong, it's positive 63 points, so we should see movement to the upside quite soon. Breakout above 1.3520 is bullish. US dollar versus the Japanese yen still consolidates the recent gains with falling momentum. Momentum went down towards the level of 50 points, or even below. Let me just take a look. Yes, just a little bit below 48 points. Nevertheless, it's now or never. Now it's the time to continue the movement to the upside. As you can see, we are out of the channel. So what we do, shall we place this channel like this? No, I don't think it will be necessary anymore. We are inside of this tight range. Let me just place this range yet again. We will adjust it a little bit. Range high 159.36 and range low should be 158.61. So basically 105 pips is the range. Breakout to the upside is expected after momentum went very low, and the market here on price wise was just consolidating and not moving lower. So that's some kind of a suspicion that possibly the movement to the upside will be quite strong, because the market doesn't want to move down for now. Gold. The gold market broke? No. The gold market is trending? No. What is gold market doing? Bouncing from the last week low at 4,453. quite high to the quite high is trading towards the level of 4,588. We might see some sort of the movement towards the level of 4,637 if we break above this level here, 4,588. Nevertheless, it's still very tricky situation because we are developing the wave. Why? The last wave of the complex and time-consuming correction. So for now, we are still inside of the range. Bulls are trying with this kind of a momentum. Let's wait and see what will happen. S&P 500, new all-time high. 7,547 is the new all-time high, which means the next target is another round number, and this round number is 8,000 points. Momentum moves yet again higher, but you can see it here that despite the fact that we've been moving higher, the momentum still didn't broke above the level of 90, right? Nevertheless, it looks like the bearish divergence has been resolved and the market keeps moving higher, so the uptrend continues. Crude oil gaps down towards the level of 90.31, stops just above the old gap, the old opening gap yet again, and we hit the extremely oversold conditions. So very interesting situation right now. All of these levels, including this one, are no longer valid because we gapped down. Maybe this one could be helpful, but I will place this level here. There you go. And that would be technical resistance 94.73. So the oil is lower, approaching very important gap, very important technical support. We might see some sort of the action here, and especially bullish action if the bulls will start to buying the dips, right? For now, nothing like this happens. The major technical support and the swing low is from the April 17 located at 80.55, and the major technical resistance and the supply zone is still above almost below the 120. So right now all of these movements here are just in line with the expectations. We have established another range inside of the range, just between 110 and 90 dollars. So now we will see how the market will resolve this situation here with the extremely oversold market conditions. So we might see some kind of an improvement of the crude oil. And last but not least is the Bitcoin. Bitcoin moved lower. Let me just, if I can, I will grab this. Yes. And I will mark it here for the low, and we'll mark it here for the high. And we have something about minus 10.61%. Down. Let me just place it a little bit. There you go. Minus 10.44. Exactly. So from the high of 82,850 towards the lows of 74,202 into the extremely oversold conditions, we now have some sort of the V-shaped reversal. Look at this. Very interesting situation just above the demand zone. As we expected, just above the demand zone. Let me just, I'm not quite sure if I'm touching the right, no, I'm not touching the right line. Let me just try again. I want to grab this line, please. No, I'm not grabbing the correct one. Yes, success. Okay, so we got the demand zone here. If we zoom out, we can see how it looks. Yep. This is our demand zone, almost there, almost there. So it is a time for a bounce. Yes, if this is a V-shaped reversal, so now we don't need it anymore. Possibly some sort of the trend line might be helpful. Nevertheless, look at this. This is the F, bearish F, or let me just switch on daily. Yeah, bearish F or bearish flag of our F pattern, right? And exactly as we said, the market hardest zone, especially for the bulls, was this supply zone marked here on the chart. We have very nice movement to the upside on a daily. This bullish candle, this green candle is very, very interesting. But on a daily, we are below the level of 50. We are in the negative condition. So maybe we will have some kind of a temporary bounce to the upside on the lower time frames, and then again we will test this demand zone. Surely, maybe even we will test the lower F line, right? That this might be considered as a trend line. But if this is correct, if this situation here is correct, then it means that the market is it is developing downwave because of the bearish F flag, bearish flag pattern, or bearish F pattern, right? However you want to call it. So failure to break above the supply zone results in movement to the downside. So please consider the situation here that the market is under the bearish pressure. We might see lower levels quite soon, despite of the temporary kind of a V-shaped reversal here. We need to go back above the 80,000 to see what is going on. Otherwise, the outlook still remains bearish, and the bearish even intensify if we break below the demand zone and we go lower towards the lower channel line, lower bearish flag pattern line, and this is roughly around $71,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.